Yo, what's up guys, welcome back to the channel. This is Omar FS, and in today's video I'm going to be teaching you guys how to find the bias of the trend. In case you don't know how to identify the bias of the trend, what I'm doing is knowing the direction where the market is actually facing, if it's actually bullish or bearish. That is what I'm going to be teaching you today, and how to use it with your strategy, and it's going to be paying you good amount of money. When we're talking about the trade I took last week, and I made about $10,000 trading the sample, like hit to hit, back to back, right? That's what I'm gonna be showing you guys, and how I was able to find out the buyers last week, and what we should be expecting this week. Midnight, I think market is gonna be opening, so we should be looking out to trade by next week. But I want to throw back to how we were able to catch up trades back to back. Let's go over to the chart. Right here, I'm going to be showing you guys how I was able to catch up with so many multiple trades and made about $10,000 last week, right? And I'm still having a trade running towards last week that we just entered but have not get into our TP, right? But we have already broken even in case if the market decide to move to the upside. So right now, this is on 4-hour time frame. As you can see right here, we are actually on a 4-hour time frame. This is how I catch up with my buyers, and this is how I trade supply and demand right now, and it's working very much perfect, right? So what you're gonna be doing is, when you come to your higher time frame, as of this very point I need a 4-hour time frame to work as a higher time frame, right? Then when you get to a higher time frame, being your 4-hour, 1 hour daily, whichever way you trade, if you're using daily as your entry, it means you're a swing trader. You'll be analyzing from the monthly, right? So if you're using 4 hour, you'll be using 15 minutes as your entry. And if you're using daily, you should be using 1 hour as your entry, or 30 minutes, right? So right now we're on a 4-hour time frame, and we're going to be using 15 minutes. So what we needed to do is to mark out the greater touches of the market. So what can you see right here? We have a touch right here. As you can see, this is the touch. I will place a line right there. You can call this your demand or your resistance. So for this point, I'm going to be calling this a resistance, right? A support. Sorry, I made a mistake writing down this as, let me just delete it and instead call it a demand either. So this is a demand, right? So here we have a demand on a 4-hour time frame, and what next should you expect? Should be expecting market to start bouncing to the upside, and here is a clear view of your demand, right? So what you need to do is, when you notice this kind of touch on your demand or on your higher time frame, you already know the bias is going to be bullish, right? Sorry, you already know that market is going to be bullish from that very moment. So all you need to do is to go over to the lower time frame, and the only thing should be on your mind, the only thing you should be looking at to buy is only the only thing you should be looking at to trade is to buy a very bare. This is GBP JPY. So whenever you see your trade or your market on your particular point of view, you already know what the bias is going to be looking like. So right now, let me show you guys why I actually knew that the market is going to be buying from this very zone when it gets there, right? So if I should take out these tools from here, you can see that market has been on a downtrend. Let me say from here has been a downtrend, and now we have started pushing and changing structure to the upside, right? Then after changing structure to the upside, what do we see? Market started crashing. Sorry. So here we see that we are downtrend, and market start pushing to the upside, right? Then after pushing to the upside, we started having a rejection. Market started rejecting to the downside. So assuming that we were active, this is where we could have entered, because we have endorsement right here. Then market crashed to the downside, then made a little pullback, then dip to our demand, right? Now getting to the demand, what next should we expect? Market should at least push up to this very moment. Why did I say so? We are bullish, and right here we change structure to the downside, and now we created what they call a lower high, lower low, lower high, lower low, right? The market have created the last lower low, and it happens to dump into the demand. So what we should be expecting is a pullback to continue the bearish trend, right? So what I did right here is to mark out the greatest touches of that bearish move, and this is where we have this line, and this line before our demand. Then when you confirm the trend that is actually bearish and is already on the zone that you expect market to bounce from that very zone, this is higher time frame. So in the lower time frame, you should look at on opportunities to catch or with this pullback to continue the trend to the downside, right? So looking out on how to know where to spot and where to expect market to sell from. So this is inducement due to smart money concept right here on your higher time frame. So we already know that markets is going to be playing around this zone of reversing, right? So what we should be expecting is when the market gets to this first resistance, what we should be looking out for is a breakout to tap to the upper resistance to crash down to continue the trend of the higher time frame. Remembering that the bias of the higher time frame is bearish, but out of this moment, we are going to be going bullish. So have that on mind whenever you have this kind of setup on your chart. Then market tap to my demand, and right here, now we turn into bullish for a moment. Remember, this is a pullback. This is not the general trend. The general trend is bearish because why we changed structure here and market started crashing to the downside. But we are going to be using here before continuing the trend. That's why you need all this kind of setup to understand the move of the market, right? So right now, what you need to do is to go over to 15 minutes. That is where you're gonna be talking about the charts and assuming to know where to take your trade. And you can see how massive we have been making good money from here. Depending the capital you are using, I think you should be making a good money from this because I started with $100 account. I was able to grow the $100 account to $10,000 account. So right now, this is the simple strategy I used, and it's actually working so perfectly. So if you pay attention very well, trust me, you're going to be learning a lot from this very strategy, and it's going to be paying off. So why it's taking time is because we actually started pushing this very trade for long now, and markets have already gone so far. So now we're finding it soon. So what's this? What's this? Get out. Sorry, I don't know what's this disturbing my system. Oh shit. I'm not going to pay that shit. So right now, uh hold on. Looking out for where we took our entry. Should be around the demand right there. Why is it taking time? Why is it taking time? Okay, guys, sorry for taking you guys so far. So yeah, this is where we started buying from, right? So this is the demand on the higher time frame. You can see how wide it looks on the lower time frame. So assuming that you took a trade from here, you already know what the bias is on the higher time frame that we are actually working out to pull to the upside. That is, we are pulling to the 4 hour bearish move to continue the trend. That is what we are going to be catching out from on this very video. So all this uptrend that we catched on this 15 minutes is actually a pullback on a higher time frame. But this is how we are actually working it out to catch out bigger on this very move, right? Here is the demand on the higher time frame, as you can see right here, and here is all the resistance and support right there. So what can you see here and how to enter? I'm a supply and demand trader, so all I look out for is to find my demand or my supply, and the same time look out to know if there is any liquidity that market is going to be timing to catch, so to continue the trend. Yeah, now you can see that we have a consolidation range right here. And what did the market do? Market dropped so heavily. Now, after dropping so heavily, market pushed to the upside, made a little pullback, but was not able to tap into the demand. Now, market pushed to the upside and now crashed to the downside. This is where we took our first entry, knowing that highly we are pulling up to the upside, right? Then we took our entry here and we measured 1 is to 5 to reward at first, right here. And you can see that market do not tip our TP, but doesn't mean that is not getting to that very zone, because why? It's trying to retest on this very support right here. This very line you are seeing here is a support. Then what the market do after retesting on the support, it started pushing up to the upside. Then how did I catch up with this very trade? I catch up with this very second trade with what we call a breakout block. So now this is my breakout block, and I also have an endorsement right here. Then I took an inducement, and if you can see very well, we have already hit our first TP right here. Then I took another trade from this very zone. This very trade gave me about $1,000, and this very trade gave me about $1,000 as well, right? Now, after hitting TP on this very zone, what can you say? You have another breakout block inducement. Now we took our entry from there again, targeting the upside, giving us 1 is to 6 to reward. Then this is how we made good money. And this one actually gave me about 2 or 1.5, I think so. Then after taking this very trade, here we have it again. Market push down, push up and retrace, but was not able to tap into the demand, just as what happened earlier right here. Then after that, what could you understand? Market pullback, tap in, we'll take a trade from there, take it to the upside, right? Then after hitting TP on the upside right here, what next could you see? We have a consolidation, right? Market supposed to be reversing from this first resistance, but what happened? Market pushed up first with strong heavily, showing that market is going to be breaking this very resistance. It means that this very resistance is not going to be holding. So all I did was to look out for my inducement. So right now, this is all the inducement. And what we have a failed fair value gap right here. We were bearish that created, we have a bearish candle that created fair value gap, and market disrespected the fair value gap, making that place a very strong spot to take a trade. And what do you see? Market get to that very zone and shoot to the upside. Now we get to the resistance where we are supposed to take our sell opportunities. And now what do you see? Market came to the resistance, tapped in, and pushed a little bit down, now came back to the zone. People trading double top were able to catch up with this trade, but I, as a supply and demand trader, I looked out for something and I could not see a supply. And let me say this is a supply, but I first saw what we call a breakout block on 30 minutes. So if we should go over to 30 minutes, I think you're going to be seeing this very clear. Okay, let's hold on. The network, I think, is bad right now, but it's gonna set up soon. All right, now you can see, let it load very well so you guys can see very much. Now, this is the breakout block I saw earlier on the 15 minutes that I will show you guys on the 15 minutes. Here it is on the 30 minutes, very clear and sound. So what did I see? Inducement, breakout block. Out of then I didn't value this. I didn't know it's gonna get to this very supply. Then right now, breakout block, we took the sell from there to the downside, breaking the first resistance, right? Then what do you see next? Markets change totally to a bearish move. Why did I say so? This is the last resistance we have on the higher time frame. It means that we have gotten to the point we need to reverse, right? And you actually know that we started by saying that the trend of the market is obviously bearish. That is, market is actually facing bearish. Now we have entered the buyers, the main buyers of the trade. We have taken out the pullback. This is where we took out the pullback, taking buys to the upside. And here we entered the main buyers of the trade, which is where and why the market was pushing with so much momentum right here. Than right there, we took a first one. After taking that, market pushed back because we already know that buyers is bearish, so market should be looking out to sell, right? Then I have a little inducement on 30 minutes, 15 minutes, sorry. Took an entry from there, then pushed down, and you can see market did not hit TP right here. And since it did not hit TP, it swept this liquidity but was not able to the liquidity. Is why? Because bearish, this is bearish move from the higher time frame, right? Sorry, my network just logged out right now. Sorry. I think you guys can see something. My network is really bad. I don't know what's wrong with my Wi-Fi. So right now you can see markets swept now, tapped into the crash to the downside. Another inducement breaker block as usual. We took it from there then to the downside. And here you can see what the market did. We took another trade from here to the downside. This is breaker block, right? Then market crashed to the upside again, retesting the first resistance, right? Retesting the first resistance, showing that we should go more for sales, right? Then after sweeping the first resistance, creating a first touch, second touch, and third touch, right? Or you can say more than third touch, depending on how you count, right? Then what do you see? I have a supply, market pull back to my supply, I sell from there. And here again, we have a breaker block, market tapped into the breaker block, then we sell again. Then that was how we were able to be selling and selling. And you can see how massive the market looks very much here. There, you can see market after pulling up to the very demand. You can see that the market have crashed the early demand that we have right there. Market actually crashed the early demand we have right there. Okay, let me know if it's going to connect back. Sorry, hold on. Okay, my network is bad. Sorry for that. So what do you see here? You can see market came to this very zone right here, right? After breaking the demand, now we took our another entry from here. We have a zone right here, inducement, took another sell from here to the downside. Then here was where we were expecting buys, and you can see what market did on the lower time frame. I think this is 5 minutes, right? Then or 1 minute either. Then we didn't catch up with the first entry for buys to the upside, at least to this demand level, or you can say resistance right now. So what do you see right here? Market came back after our entry hit TP. Market came back to this zone, as you can see right here, and now crashed down. But we didn't catch up with this very trade because I went to play football out of that very moment. But right here, we hit the first TP on the lower time frame. We came to our point of view. This was where I was expecting market to come back to. If you see over here, I have a liquidity, that's inducement, right? So market came back to this zone, then tap into a demand. This is a demand from the lower time frames, some like 1 2 3 5 minutes, right? So market tapped in and continued the trend on a one minute time frame. We took another entry just as we did right here, but it was not that strong and market crashed, right? But not that I didn't know that market is still gonna be buying. So market bought from there, and I lost only but two times last week, right? So right there, this is now a new trend. I didn't take a trend from this because it's not showing me any clear opportunity to take a trade from these very zones right here. But assuming I took a trade from somewhere here, this should be a massive win, right? But right now, we get back to this resistance, right? Once we get to this very resistance, if you go to 15 minutes, you're going to be seeing your entering very proper, right? So you can see right here, what do we see? Market first came to this zone, but was not able to tap on the resistance and crashed. Now it made a little pullback, completing the trend to touch on the resistance. What the first could not do, the second did it, right? So after that, it crashed. What do you see? You have a fair value gap here, and we also have a fair value gap that broke to the first fair value gap. So I entered from that zone to the downside, targeting the close by liquidities, right? Now, market after touching the close by liquidities give me TP hit, then market started consolidating right here, right? Then this consolidation happens to sweep all the liquidities. You can see all these things, all this range right here is the liquidities. Then after sweeping that, you can see that the market, I was actually holding this trade when it closed. So you can see that market went back into the zone. We took our entry from that zone. Now we're going to be holding the trade to this very zone. So I believe this video helps you a lot. And if you enjoy my teaching, subscribe to the channel, turn on the notification button so you will not be losing whenever I drop videos as this. So if you enjoy my videos, keep watching and learn from this. Thank you.